know, and as I promised, if some of you already taken part of the last mentoring, which I just did on the 7th of January, it was the part 1 of this kind of survivor strategies. And now we are going to talk about the rest, okay? Not all of my strategies, because like you know, it's like at least like 10 hours, but I picked the one for you, which is like really can be your key for survival, first of all, on the market, okay? So we are just waiting for 1 more minute to start it, and then on my traders trading style and let's call it like an improvement cycle, it's getting harder for them to find the right trade. Good afternoon, Dorit. Oh, nice. Lots of you are here. It's great. Hi, Naja. Okay. There are some really familiar names already. One, yeah. Okay, traders. So let's just start it. First of all, welcome on our part 2 of the survivor strategies or useful strategies, especially in this strange environment. Well, let's be clear, not too many things changed since the 7th of January. Of course, yes, sorry, US has a new president. I cannot bagatellize this this kind of fact, but next to this, unfortunately, the bubble is still growing, okay? So the environment at the moment on the market, it is still, from my point of view and from the point of view of the, let's say, old-fashioned strategists who are not that kind of new wave strategies with the mask tweets and everything like that, so who are still believing in fundamentals. However, it looks like they are just not existing anymore. So unfortunately now we are still in euphoria. I could say that it is unfortunately or fortunately, you know, it depends, but what I just experienced, not just on my trading, but on my traders' trading style and let's call it like an improvement cycle, it's getting harder for them to find the right trades during the day. I don't know how is it about, how is this happening with you guys? Is it easy for you to find the right trades during the day and close the day green? Just click Y or no, okay? Thank you, Margaret, I will be on it. No, losers. Patrick, very good. May I ask how long have you been trading, Patrick? Not easy. Okay. So most of you, the answer, unfortunately, which I experienced from my traders. So, okay, Elliot, the question was that is it easy for you to find the right trades during the day and the right setups, let's say like that, and close the most of your days in green? Great chat, wow. 1 month. Starbucks, okay. No, Elliot, okay. It's not okay, but unfortunately, this is what I experience nowadays. 2 trades in green. Great, Margaret. Okay. Hey, yesterday, especially the beginning of the day, it was not that bad. Okay, great. Yes, don't give up. This is the most important thing, guys. You have to be patient with yourself and give the time for improvement. Reversal point. Okay. So we can summarize like it's not easy nowadays. You know what, guys? It's not easy for me either. So that's why I just somehow limited my my entries, okay? And what I see nowadays that the first, let's say, half an hour, 40 minutes are like crazy. They are going crazy moves on the stocks, and you can find plenty of opportunities if you have the right strategy. But after like 40 minutes, 1 hour, it just stops, and that's it. And this is usually because, or no, it's not usually, this is the fact that market is on all-time highs. Like today, the S&P 500, it is just made, I have to check myself, but yeah, it just made almost a new time, a new all-time high. We are not there yet because the all-time high is 385 and 85. And today's high, and I don't think so that we are going to go more, to tell the truth, it's 385.46. But if we take a look at the daily on the S&P 500, we can spot a really important thing, to tell the truth, which is not normal by not all-time highs, but on a straight up moves like the last 4 days. And now I just tried the screen sharing. Hopefully I will do it. Okay, because I just would like to analyze with you together the chart of the S&P 500, monitor 3. Okay, so this is my account. We will see that in a minute. Okay, here we are, and this is it. Okay, so if you take a look at the S&P 500 daily chart, which is here, I just make it bigger, and we had a small, let's say, pullback here, this EMA 50, EMA 50, and since then we had a nice up move here, almost the high of the year, okay, or all-time high, not just the year. What can you recognize, which is like not really shows that buyers are strong, despite of the up move in the last 4 days? What can be a sign for that? That maybe the buyers are not that strong. Because listen, the candles and the price action, it's up. So it's obvious, it's going up. Shows strength. But something is really, really fishy for me. Exactly. High on the top here, Mark, not really, but the volume is the right answer. If you take at this up move, and at the same time, we see the volume here on the bottom, it is decreasing. So the buyers are not that strong. However, look at back here when it just went up on this one in the beginning of 2021, the new year. It was like a fairly nice amount of buyers. But now what I see that the sellers are getting a little bit more than the buyers, and this is just, I try to teach you some simple things which is like clear for starter traders as well. So if you simply just take a look at the volume, it can show you that something is not okay here. So yes, Elliot, this is as well, but volume is the most important thing here. 1/3 of my screen. Oh, how can it be? It's weird. Okay. But never mind, you can take a look at the daily chart of the SPY on your platform as well, and you can see what I'm thinking of. Okay, so the volume definitely it has some down move in the recent days. So less and less traders are going to join the party. I have some theories, but this is just my opinion why it is happening. First of all, you know what happened with these GME stocks and so on. So we had an extremely turbulence move on the markets, which we've never seen. Guys, I am on the stock exchange during or since I don't know 2003-4, okay, almost 20 years, 18 years, something like that. Never experienced something like this, okay? And we are living in an environment when someone who is really a huge innovator, and I really respect him because he's doing a great job. We are talking about Elon Musk. But come on, if a man is doing a tweet on the Twitter and something is going 10, 50, even 100%, I mean a stock because of a tweet, this is not normal anymore. And I just read an article about this, that an analyst told that, what is the problem with that? Warren Buffett did the same. He manipulated the market. Okay, come on, Warren Buffett, he is a genius in fundamental analyzation to find the next Coca-Cola, Pepsi, Costco, or anything, okay? Or even Tesla. He is really good at it because he is a fundamental trader, investor, with a lot of knowledge and experience, okay? When he tells something, there is history, there is background behind his sentence. But this is like my dog loves Etsy. Come on, this makes a company worth 10-20% more? No, it does not. Of course it's not, from the fundamental side. So what I see is total madness. So what I've seen in January, it began and it became more vulnerable, more hectic. Okay, so I would say that this kind of environment is extremely risky, guys. Okay, so that's why especially starter traders need some really, really good strategies to survive. And the strategy, believe me, the strategy does not start with the right patterns and the right stocks. It starts with the right risk management, then the right patterns, and the right position management. Okay? So we are going to start, let's say, to repeat that again as well. So now, one thing is for sure, we are in euphoria. It doesn't matter how much is the unemployment rate or what's happening in the world about the COVID-19, which is still getting really annoying for lots of people, especially for the tourism stocks and restaurants here in Europe. All of the owners are impacted really badly, and they really want to open the restaurant and the hotels, which I can understand, but unfortunately it is still forbidden. So the situation is getting more and more desperate for the people in personal lives and on the business because of the COVID. But on the other side, stock exchange is still going up. So something is not okay. This is for sure. So euphoria peak, as I told you in January, still not reached. I would say it's still not reached yet as well. However, we have a really good opportunity, not just on the SPY, but on the triple Q to do a double top, which is usually a very strong direction reversal or pattern. Okay, but I can imagine even that the SPY is going to shoot to 400. Okay, it depends what Yellen and Janet Yellen and the SEC and everyone just decided today. We still don't know what was the decision about the regulation because of this GME Reddit and Wall Street Beat guys thing. So we still don't know what they are planning. This can be a huge surprise for the markets, to tell the truth. We have a strange situation of the COVID-19 as well, still on the pandemic, because of the variants. If some new strains are going to head in the meantime and the vaccine is not working against them, then that will be a huge problem for the humanity again. So we have still a lot of question marks. Till then, the market is still moving up. This is for sure. But euphoria is still not peaked out yet. But I feel it's really close to it. Okay? I cannot tell you it takes days or weeks or even a month or 2 months. One thing which I know is something is going up so fast, it should come down so fast. It's easy like that. All right. So this is the environment now. We went through the preparation for the trading day on the last mentoring. I'm not going to go through on this again, but what I strongly recommend you, as I told, the briefing.com to choose some really good stocks, especially the analyst upgrades and downgrades I like, and of course the top 20 because I'm still using the old platform. And what is very important nowadays to combine the news and the sectors, which I told you. If you have a stock like, I don't know, I like the GME, GSX, and so on, I would say which is so hyped up and it includes or included in the Robin Hooders strategy, I would avoid rather, okay? Yes, you can make really good money, and Mayer just did, and it was a really, really good job. But I rather go for, let's say, much much lower profit, but sustainable profit, okay? Which I can just reach every day. What else? The minute and the 2 minute and the 5 minutes. It's extremely important. I just wanted to repeat that because without this, you cannot recognize the patterns in my strategy, okay? So I use the first 45 minutes, the 1 minute chart. After that, I switch to the 2 minutes chart. And after 11-ish, I just use the 5 minutes chart. Okay. What else? Risk management. So this is a crucial point, especially now, guys, okay? I know that you know already. I taught it several times, but especially now, it's extremely crucial to survive this kind of environment. And I always tell my traders to use 1% of the equity loss per trade, maximum, okay? It's okay if you do not feel comfortable with the market, so you use only 0.5 or 0.8. Totally okay, but no more, please, okay? And please tell me if you have a 240K tax account, okay? And you can go down 20K, 20,000. What is your 1% loss per trade in dollars? So 240 is the equity, 20,000 the drawdown. So if you are losing 20K, you are out of the game. Exactly. Very good. This is the main mistake what the traders are doing, especially with the funded accounts, because if you have a plain CFD account or an equity account, which I have as well with Comex, it's easy because the equity is yours, but the 240K, it's not your money, it's just a funded account. And yes, exactly, you have to do the math, the calculation based on the maximum loss, which is 20K, so 1% is 200. Yes, Hannah, you can get it from Clifton. Yeah, it is recorded, so you are more than happy, or he's more than happy to send it to you. So you're more than welcome to listen to it. Yes, I know, Martin. With the intro account, you just, to be clear, you just can get a hint of trading, but to make it like profitable, it's really hard, especially if you are a total starter. Okay. So I would say that the reasonable account to start with in the funded account, it is the student one. Okay, the student one. Okay, so this is, yeah, this is the 1%. Very important, guys, especially now. After 3 losers, call it as a day. I know it's hard. I know it's hard, really hard to walk away on that day knowing that you are in the red. It's extremely hard to accept. But believe me, every of my traders who I was just really mentored or trading with, I asked this question: what are you doing after 3 losers? And the question and the answer, it was always the same. I try to get it back. Revenge trading. Okay? 3 losers, call it as a day, please. Yes, I know, Elliot. I know. Yes, it is like something like maximum $50. Okay? Yes. I always call it 50 because it's like it's still like a small one, but with $50 loss per trade, you can already build something. Yes, exactly. It's a little bit better. Yeah, it depends how much is your down move. If it's 6,000, then yes, $60. It's too much, David, because your loss is 3 times your 1% equity loss per trade, which is like in the mean of the student account, it's maximum 150. Okay? Guys, there is no other way to do that. Believe me. Baby steps. Baby steps. You have to learn walk before running. It's always like that. Okay. So 3 losers, call it as a day, please. And trade only on certain sessions. What do I mean on that? The morning or the afternoon. I prefer the mornings, to tell the truth, from 9:35 to 11:30. If you were participating on my first part, then you know why I never get into a trade in the first 4 or 5 minutes, only after that. Okay? And lunchtime trading, it's not really easy, especially for starters. So rather, if you miss the morning session, trade the 2 p.m. till 3:30 p.m. Okay? Maximum 5, 6 trades, and rather be a quality and selective trader than lots of trades to do, because this is going to cause lots of loss as well. Lots of trades equals usually lots of loss, okay? So try to be selective. I'm going to show you how. Maximum 2 trades on the same stock per day in order to avoid revenge trading. Because this is the other one from my experience of mentoring, of 11 years of mentoring now, that my traders, usually they get this, I don't know how to express it, but they have a button in their head, and if they try to trade the stock 2 times, and for example they lose, they desperately want back the money from the same stock, and they starting to trade it more and more and more. So at the end, they will trade 10 times this stock during the day to try get back the money. So that's why I'm trying to limit this with these 2 trades on the same stop per day rule, because it's working. It's really working. You're welcome. You're welcome for the training. Yeah, these are extremely, so risk management, guys, it's always very important. With the risk management, I would say the position management, it's important as well. The position management, I've told you on last time as well, so we are going to repeat it again. So I'm going for 1 hour with the first partial. On the first partial, I get out 3/4 of my share size, okay? If you bought 100 stocks, you are going to sell 75, and on the remaining 25, you are going to set your stop loss to half R. What does the R mean? 1 R, it's 1 risk unit. So if you have an entry over $20 and your stop loss is under 1970, so you have like a, let's say, 30-cent stop loss, this is your 1 R, the 1 risk unit. So the stop loss equals the 1 risk unit. So you have 30 cents. The stock is moving to 20, 40 something, just before the round number, semi-round number 20.50, okay? And it's making some weakness, some hesitation, so you decide to take out your first partial, which is 3/4 of your share size, so you are going to sell 75 shares, okay? 75 shares, market sell. On the last 25, immediately you are going to change your stop loss from 1968 to 19, let's say like 68, 78, 85, okay? So with half R, 15 cents more around approximately. Of course, it depends on where is the VWAP and so on, but this kind of position management, first of all, for the starter traders, it gives a huge feeling of to be more relaxed after the first partial. And if you think in it, what is going to cause you on the long run, that to reach 1 R, usually it's easy, okay? If you choose the right pattern and the right stock and the right entry, it's easy to get to 1 R, okay? To the 30 cents in our meaning by our example. And after this, the worst thing that can happen to you, you're ending in green, okay? Because even when it's going to come back to your half hour stop loss already on the last 25 shares, it's a tiny little bit loss, okay? So you are still going to be in green at the end of the trade, okay? Yes, it's green rules. And the reason for that is that, guys, I'm a trader for more than 15 years. I know how did it feel to start it, and I knew that I should have the stock till it's just running to get out on 2 hour or 3 hour or on a huge profit, but I could not. I needed positive feedback first, that I am able to do that. I want to see profit on my account first to get confidence. And then, of course, this 1 hour might is going to go to 2 hour and 3 hour later on. But for first instance, for the first steps, if you can hold it till 1 hour, you are very good. Okay? This is like the rules for the starters. So, this is my first rule. If it's getting to 1 hour, get out at least 70% of your shares and getting out 75, and put your stop loss or change to your stop loss to 1 hour. Next one, if the profit, like It started to go like crazy, and the first hesitation candle, like a doji or a red candle, I'm speaking about a long now, for an easier understanding, it's getting over, let's say, in our case, 2070, which is like 70 cents in the profit already with the 30 cents stop loss, so 2 times your risk unit. It's easy. Get out your 75% of your shares, and if it is already in 2R, so the price already reached 2R in the profit, you can put your stop loss to break even. So listen, after this, with this 25%, anything can happen. Okay? So like this, you can participate in the huge runners, but on the same time, you just minimize your stop loss as well, your risk. So guys, during a trade, this is your first goal. Maximize your profit and minimize your risk. That it is all about when you are doing a good position management. And I think this is fairly, it's like very good for the starter traders to follow. Okay? So, of course, I'm using a trading stop based on the technical levels. I'm going to show you soon. And the final close, usually it's based on the MACD chart. When I see, on the MACD chart, significant resistance or support or run number, then I'm going to get out from the trade. So this is the position management. Okay, the right order before the entry. First of all, you have to recognize the pattern. Of course, usually, well, hopefully you know which sector it belongs to. Maybe you just read some news about the stock and so on. Then if the pattern is okay, like a bull flag, bear flag, reversal pattern, anything it can be, then the trading window is coming next. In the trading window, you have to see that the volume is minimum 50K, 50,000, by the breakout strategy at the end of the 6-minute candle. And you have to look at the percentage as well, which is like maximum 8% or 10% by the breakout strategy, which we were talking about in the first part. And we have to take a look at the spread. And if we are talking about a VWAP reversal, you have to be aware of the volume as well. I'm just going to show you soon. And ATR on the daily. You have always, really, always check the daily before you get into any trade. Okay? It can cost you big money if you are not taking a proper analyzation before you get into the trade. Dr. Alexander Adler's book, The New Trading for a Living, this is one of my best books in my life on trading, to tell the truth. He just told that the preparation to get into a trade, it should be long, it should take long, okay, to decide if you are getting in. So it's a slow process, but if you are in and if you are taking profit, it should be quick and fast. It's very good. This is the Dr. Alexander Adler. I just type in The New Trading for a Living. And really I'm going to send a message to this guy that I really love his book, and I always suggest to all of my traders. So The New Trading for a Living. And why I prefer him the best, of course, next to Mayer's Market Whisperer, because I think this is a genius book as well. But most of for the starter traders, most of the time, I rather suggest Adler's book, because he is a psychologist and a trader. Okay, so to combine these two fields, this is the strongest. This is the strongest weapon in order to become a good trader. Okay, So that's why I really, really love that book, because he's not using this psychological and understandable or hardly understandable blah blah, the truth. No, he's explaining in plain, easy words how you should really do the right or establish the right attitude in order to become a good trader. So it is fantastic. So this is the new trading for a living. Okay, so the right entry before the right order before the entry, it contains every rule which you have to go through. So the pattern, the trading window, the volume, the ATR, then calculate your share size and put your stop limit order into the system. What is more important, you cannot leave any point out during your preparation for a trade. And listen, if you are still slow in that, which is okay, practice is going to get you faster. But if you miss the trade, don't get FOMO, please. Do not get FOMO. This is the worst. Don't get FOMO. Let it go. Believe me, stocks are like, or stock patterns or trading patterns are like trains. The next one is going to come in 2 minutes. So no worry, okay? This is going to be the right order. Okay, let's see the VWAP reversal strategy. So this is my next one, which is I really like. Of course, the first one, as I told you, this is the breakout strategy in the first 4 or 5 minutes. And after this first 15-20 minutes just went by, I go to the VWAP reversal strategy. The stop and the limit are trade. This is depends on the spread really, what the stock has. Okay, like today, which I had MAC for a breakout in the beginning of the day. Just a sec. So this is here. With this example, at least we repeat the breakout strategy, okay? MAC. Okay. Just a second. Screen sharing. Monitor 3. Okay. Hopefully you can see my monitor soon. And the MAC trade. MAC. Can you see the chart of MAC? Macro? Okay. So usually this is my first strategy. In the first 4 or 5 minutes, I'm looking for strong stocks, even with a gap up, but no more than 8% by an expensive stock, which is more than $60. Or it's better, no more than 10% on a cheaper stock, which is less than $40 stocks. Okay? For this strategy, I really prefer the low price stocks at the moment. 5 years ago, it was totally doesn't matter how big is the stock. But nowadays, when we have this blowed up balloon and it's just growing and everything like that, unfortunately, it's not working with the really high price stocks, only with the low price stocks. So stocks under $40. So I was looking at Macro already because I've seen that this was just beaten down till the 200 EMA tomorrow. If you can see my daily here. On the daily, I'm using the 20, 50, and 200 EMA. And it just touched the 200 EMA yesterday. So I thought it can be like a nice reversal to the upside today. So that's why it was on my list, MAC. And when I see that it started with a small gap up, did the flag pull, and then this nice bull flag with the entry over the pivot point of 12.96, so I get in over 13, the round number, with a stop loss of 12.75. This was a really, really, really good entry for me. So this was my entry, and this was my stop loss. So under the lowest point of the bull flag, it's my stop loss, and over the highest point of the flag, it is my entry. So this is my first breakout strategy of the day. And as you can see, it just reached nicely the first pivot point or the next pivot point. So this was the first partialing point, and if you were patient enough, you could go almost to this $14. So you can see it just did 1, 2, 2, 3, at least 1 to 3 R. But here I took out 3/4 of my share size, and then if you were patient enough, you could get out the last shares on the 14. The stop loss, it's my entry was 13.05-ish, something like that, and the stop loss, it was under 12.25, so that means that you had like a 28 cent stop loss. Yes, David, with the slippage or you know, you don't know how much, where you are going to get the price with the stop limit order, but yes, between 25 and 28. Yes, Elliot, this is a flag, a bull flag. Yeah. So this was a really nice trade to do today. Yes, the right stop loss, guys. Okay, so let's just start it from the basics. To be a good day trader, you need to master one thing, but to master it really, really on a professional side, which needs time and experience, of course. And this is the price action. Okay, one of my best mentor ever told me that, Adi, if you want to be a good day trader, you have to master to read the price action. And to read the price action, when you are a starter, it's going to help you based on the candles, okay? Because the candles are showing you the price action on the chart or on the stop. So I did this. When I see a flag or a cup and handle or a reversal pattern, I always go after the price action is showing me. And if I have a flag, okay, then I'm going above the flag highest point, so it's included the wick of the candle as well, as a long, in a bull flag. Sorry. And I go short, a stop loss under the lowest point. Sorry, I have some sore throat today. So in this case, the entry was over 13. Why? Because the highest point of the flag, it was 12.96. 4 cents. Yes. Yeah. So this was a really nice trade to do today. Yes, the right stop loss, guys. Okay, so let's just start it from the basics. To be a good day trader, you need to master one thing, but to master it really, really on a professional side, which needs time and experience, of course. And this is the price action. Okay, one of my best mentor ever told me that, Adi, if you want to be a good day trader, you have to master to read the price action. And to read the price action, when you are a starter, it's going to help you based on the candles, okay? Because the candles